I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning, everyone. I'm T3 Live Editor-in-Chief John Darsie.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are up big this morning on hopes that the government shutdown might finally come to an end. And of course, this is just excitement at this point. Are we jumping the gun here, John?
Yeah, the size of this morning's gap up is just evidence of how desperate Wall Street was for some good news. Recently, we've had both sides have been digging in their heels, refusing to negotiate. There's been no progress whatsoever on this debt ceiling situation. But then this morning we got news that conservatives are widely supporting the idea of pushing the debt limit up for a 4 to 6 week period. Another short-term Band-Aid, kicking the can down the road type solution, but at least something that's going to perhaps avert disaster in the short term. But it'll be interesting to see whether we can continue to make progress towards these negotiations, and I'm sure it'll remain a very headline-driven environment where we get positive headlines, negative headlines. Negotiations will stall. They'll make progress, and I don't think this is the end of the road, and I don't think we're out of the woods at all with this situation. So I still think if you're going to be trading, you need to have ideas on both sides in your back pocket.
Right, because if negotiations say they do stall, are you nervous at all how much that could hit us with this excitement that we're seeing?
Especially as we get closer and closer to the deadline. Obviously, you're in college and you have a term paper due, and you wait till the last minute to do it, and then something comes up and gets in the way of you finishing it. Obviously, it's a lot more of a panic if you don't have a lot of time to solve the situation. So as we get closer to the deadline without a firm resolution, it'll continue to be an issue.
All right, so let's map out our levels then, right? If we don't know what's happening, we go to the chart. So.
Yep. Well, we always go to the charts no matter what. We do pay attention to the headlines, and we adjust our aggressiveness based on the headlines, but at the end of the day, price action is king, and we let the market do the talking and tell us what we're going to do. So take a look at the chart of the S&P. What we're getting this morning is about a 15-16 handle gap up as of right now on the S&P. That'll take us back to this level where we broke down from earlier this week. And that's also where the 8 and 21-day moving averages are curling down. So this is going to be a huge, huge battleground for bulls and bears. Bulls will be trying to get a gap and go to the upside to reclaim that major support level. The bears will be looking to defend that level and potentially push us lower again. But the size of this gap up is definitely very significant. But it's always going to be about how that gap is treated, whether or not we hold it.
Right, and tech has really been where the action has been. We've got some haves and have-nots within this sector, and we know that in a sea of red or during a correction, we look to the stocks that have held in the best. So let's take a look at some of the haves first, because these could be some of the stocks to go green first. Or they are green now.
Yeah, on Tuesday, you had the baby go out with the bathwater. If you follow me on Twitter, I was talking about that. And your job after a day like that, when you have huge carnage in the tech sector, is identifying which stocks hold up well or reverse in the subsequent sessions. So that's what we did yesterday, and we came up with a nice list of stocks that I think, despite the fact that we are gapping up this morning, you could look to maybe balance yourself with a few relative strength longs and then a few relative weakness shorts that we'll get into after we talk about the strong ones.
Right, so let's talk about Apple, which was able to close well off its lows yesterday and post more than a 1% gain.
Yeah, Apple's one that everybody's always watching Apple. I don't like to be the guy that talks about Apple every video I do and things like that, because I think it gets over-covered, and I think a lot of times the pattern's not that compelling. But I think right now is a time when it's actually one of the better setups. It's been holding in, showing some relative strength over the last few weeks. Holding in, it's in this descending triangle type pattern, wedge type pattern, whatever you want to call it. It's got a descending trend line in place, but you can really calculate your entry based on whether or not we break this descending trend line. It is above its 8 and 21-day moving average, unlike most stocks in tech right now. So this is one. It's gapping up. We'll go to the 5-minute, 24-hour to see where it's gapping up. Gapping up to 491.50 so far this morning. So that'd be a nice healthy gap up to around this area right here, if you can see my red cursor. So be right near this pivot, and then the next pivot resistance in place would be 496.91, so around the 497 area. That would be the next obstacle if we can continue to the upside in Apple.
And while it's a retail name as well, we're looping Lulu in here with this group. It's held up well during the two-day pullback. It's managed to stay above the 8 and 21-day.
Yeah, Lulu's listed on the NASDAQ, and I wear some of their clothes. They're not just for women. Great technology, really comfortable. And I don't wear the black yoga pants, so don't act like. I said that on Twitter. I said I wear Lulu, and people were like, "Oh, you're a metrosexual," and this and that. And I feel like they didn't understand that I don't wear the yoga pants. They have shorts. They have T-shirts. So
you should have come in. Did you want to call wearing it?
Got to dispel that notion. I should. That'd be a Scott thing to do, but I had to just dispel that notion right away. Take a look at the chart. Sort of invest in what you know. I like Lulu, the brand, and the stock is starting to act a little bit better too. Price action is king. But we held the 21-day moving average when a lot of other NASDAQ stocks did not. And we have been listing this one off the charts. We had this bull flag descending type channel in Lulu that broke to the upside. It succumbed a little bit to the market weakness on Tuesday, but then, like I said, yesterday held the 21-day. So I think this is one that should be on your radar to be one of the first ones to potentially go, test these highs, and potentially break above them if the market continues to the upside.
All right, and how about SanDisk? This one got a nice reversal during the volume trading session yesterday and picked up some buyers around the 21-day.
Yeah, SanDisk is another one we've been listing in off the charts that has held up really well amid the carnage in tech. Yesterday held the 21-day with a wide travel range and a red dog reversal. Held the 21-day, closed back above the 8-day even. So you look on this chart, it's one that, in the context, it's held up really well. You could even call this a cup and handle with a little cup right here. Handle, it's breaking above it. So all you got to look to now is 52-week highs as your potential resistance if we can break above that pivot. And I think SanDisk, given its relative strength, could be one of the first ones to go if the market makes a sustained move to the upside.
All right, another one for your radar. And Sina has actually been able to erase most of the damage from Tuesday's sell-off. Does the composure of this one look any better to you? Yeah,
the Chinese internet stocks as a whole have been really strong over the last few months, but obviously with the recent damage in tech, there's been some technical damage on those charts. But Sina is the one that's held up the best. And then yesterday, you talk about gauging reversals and relative strength. It showed the most relative strength yesterday and is still constructive in an upper level pattern. You take a look at the chart. It held this key support level down here, back above its 21-day moving average, reclaimed almost half of Tuesday's losses in yesterday's session. So Sina is one I also think that the pattern is a little bit sloppy, but I think one that could show some strength and continue to the upside.
All right, well, there's also some have-nots within the tech sector. We're going to go in the trenches with some of those right after this quick commercial break. We'll be right back.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
We're back and going in the trenches with some of the have-nots within the tech sector. These could actually be some possible shorts.
Yeah, I mean, when you get a big gap up like this, there's no firm resolution. There is signs of progress in the negotiations, but like I said in the opening, I think when you get a gap up like this, you have to have both possible continuation longs in your back pocket. You also have stocks that you might want to look to short if we do get some different type of rhetoric out of Washington, stalled negotiations, this heated type stuff that we've been getting over the last few weeks. I think it's important to have those type of ideas in your pocket, and there's several names in tech that didn't really show much strength yesterday that I think could potentially be shorted on a bounce.
Right, like Tesla, which did show some relative weakness and broke below the 21-day, closed below it actually for the first time since May.
Yeah, I mean, Tesla's one that I'm sort of torn on Tesla because the stock's been so resilient this year. It's closed below the 21-day only twice. Yesterday was the third, maybe fourth time, I guess, that it closed below the 21-day moving average. But it sounds like, or feels like the music might have stopped a little bit on this one. The music might be starting to wind down. As yesterday, it showed basically its biggest 2-day drop that we've seen this entire year. And it tested the 50-day moving average for the first time this year. So I think some momentum and some of that speculative money might be seeping out of Tesla a little bit. It's probably gapping up nicely this morning. We'll see where it is. Currently around 173, but already weakening. 173 would take you, yesterday's high was 174.99, so still not back above yesterday's high. That'll be your key short-term reference point. But I think use your short-term reference points like yesterday's close, yesterday's low, potentially as areas to measure a potential trade in Tesla.
Amazon showing relative weakness as well. Why is it having trouble finding buyers at these lower levels?
Amazon is another one that just didn't get that reversal that we saw in a lot of those tech stocks yesterday. I don't know the reason for it, but as technical analysts, we're not as concerned with the reason as we are with what is actually going on. So you take a look at the chart of Amazon, and yesterday, like I said, wasn't able to find footing and reverse like some other stocks in tech. A really harsh gap and go to the downside on Monday, big time acceleration to the downside on Tuesday that continued yesterday. Below its 50-day, looks like it might have a date with the 100-day, but then obviously the gap up this morning throws a wrench in that idea. Take a look at the 5-minute, 24-hour on this one. Looks like it's set to open up around 303. Yesterday's high was 303.50. So yesterday's high is going to be the really important level on a short-term basis to gauge this trade. If it can accelerate above yesterday's high, potentially might repair some of the damage on its chart. If it fails at yesterday's high and continues lower, watch yesterday's close and watch yesterday's low if it gets down there.
And Netflix having a rough day too, slipped another 4.6%, and buyers just don't seem interested.
No, you'd think with all the federal workers that are furloughed, they might be spending some time watching Netflix, but apparently not. Netflix has continued to the downside. Yesterday was among the weakest stocks, tested a 50-day moving average, did close slightly off its lows, but nothing compelling. We'll go ahead and take a look at the 24-hour on this one. Actually accelerating a little bit this morning pre-market, so it's around 299 is where it's set to open. Look at yesterday's high. You notice a trend here in what I'm doing. Yesterday's high is 357, so very similar to Amazon. It's opening near yesterday's high, looking to reclaim all of yesterday's losses, but see if that high acts as resistance or as a potential short-term inflection point in the stock.
All right, let's do some quick hits here and talk. Google had a strong bounce off its lows yesterday at 843. What do you think about Google upside momentum today?
Well, Google's one that long-term, I love Google. I think it should be potentially a part of any long-term portfolio. And when you like a stock long-term, you look for technical areas that you could potentially enter. And after a decent pullback since July, Google yesterday found support at this key pivot here. The pivot low was 645.56. Briefly broke below it, came back above, and same thing, had a red dog reversal yesterday. Not a real loud one where it ended up with a green-bodied candlestick, but enough to make me think that the downside momentum is slowed in Google, and you could potentially look for entries. I'll go back to the 5-minute, 24-hour on this one too. 862 is near where it's opening. Yesterday's high, 862.65. So looks like we got a lot of stocks opening near yesterday's highs in tech, so that'll be the key short-term level to watch universally, I think, today.
All right, and Facebook had a strong snapback and was able to close well off its lows. So do you expect upside continuation today?
Facebook's one that wanted to get that red dog reversal. It tried. Early it bounced, found resistance from yesterday's low, came back down near the lows of the day, then bounced again. It was a roller coaster yesterday, but it's one that's trying to hold on. I'm pretty bullish on Facebook on dips. I think it's one that you see some of these stocks like Yelp and Pandora that are, and even Tesla to a certain degree, that you see some of the speculative money seeping out there. But I think Facebook, the fundamental story is a little bit more compelling with those, and it's just starting to turn a corner in terms of its mobile advertising and things like that. And it's one that if it can climb back above its 21-day moving average today, which it likely will with the gap up, we'll take a look at the 5-minute just to confirm, 47.80. Really nice strength in the pre-market. High here, 47.84. What do you know? So the 21-day moving average will be key. See whether we close back above it.
How about gold? Interestingly enough, the GLD dropped another 1%, signaling some investors have regained some confidence here. Would you expect more downside action here?
Yeah, gold seems to just perform badly in any environment. There's been all this market turmoil, so people thought maybe this is a chance for gold to potentially bounce. But any strength, like we saw on Tuesday, it was able to break above Monday's high, but then it just faded the rest of the day and finished negative. And then yesterday, big gap down just based on sideways action in the market. So sideways action seems to be bullish for gold, and market turmoil is sort of neutral for gold. And then when the market finds its footing and panic subsides, that's when gold can really get punished. But we'll see if we can get a look at it. It's around 125.80 this morning, so not a ton of reaction to the potential progress in Washington, but I think something that'll continue to bleed lower.
Right. And biotechs had been strong recently, but got hit pretty hard yesterday. What to do with biotechs now?
Yeah, it's an interesting case. The biotechs, all that strength in the market has been hidden in the tech sector and in the biotech stocks. And then the last few days, the air has really come out of those groups. And the biotechs yesterday did close off their lows, bounced off the 100-day, but really didn't show many compelling signs that a bottom could be in. We'll take a look at the 5-minute, 24-hour to see what type of pre-market snapback. We're indicating around 197 for an open there. So just in the middle sort of this candlestick. This is one that the technical damage we've seen in the last few days is very concerning to me, and one that I wouldn't be rushing in to buy at least the ETF. I think if you're going to be trading some of these biotech names, just focus on individual names, but not one that looks too pretty to me.
All right, so in closing, what's your advice to traders as we begin the trading session and await this potential resolution?
Yeah, I mean, I think the gap up obviously is going to be frustrating for some people who might have been looking to play an oversold type bounce. In this type of environment, a lot of traders take less overnight risk and look for intraday moves. So you get a big gap like this, it takes away some of the trade. But I think as the debt ceiling deadline nears closer, I think and as long as the deal's not in place, I think there will continue to be volatility, continue to be two-way action in the market. So I think, like we talked about in the show, have short ideas, long ideas in your back pocket, and be prepared for any type of action that we see.
All right. Happy trading, everyone. Have a great day.